Memorial Day weekend was a pretty quiet weekend on the real estate market. How did this lull have an effect on our real estate market? Well, let's take a look at the numbers and see what we can find out. I'm Ron Milligan with RE/MAX Select here in Portland's Pearl District. And of course, I have got for you our weekly market update, our summation of what happened in the last week on the residential real estate market. First thing up are the supply numbers. So the supply side of our supply and demand equation, the number of active listings available for purchase. That number is up from last week, but not a whole lot. So last week we had around 3,207. This week that number rose to 3,275. That's a 2.1% increase in the number of active listings. That's pretty normal for this time of year. Normally this time of year, week after week, we would like to see, an increase in the number. We would likely see an increase in the number of active listings. So not crazy to see that, especially when we put in the context of the previous 2 weeks where we had 300 and 360 respectively more listings from week to week for our numbers of active listings to purchase. And then when I compare it to last year, pretty much the same time last year, which of course was a bonkers year, we were down at 2,568 active listings, right now 3,275. That's about a 27.5% increase in the number of active listings. When we look at the demand side of the supply and demand equation, so what were buyers up to, how many new contracts did we have, the numbers weren't terrible again. We saw 874 new transactions go under contract last week versus the previous week, which was higher, 968, week before 866. So feels like last week we gained a little ground, and maybe we lost a little ground this week on the quieter week. So not a terrible number. When we do compare it to last year, though, that number was 1,086. So about 200 more transactions last year versus this year at roughly the same time period. But again, last year was just a bonkers year on our real estate market, and we've seen nothing like that for years and years and years. So how did the homes do that did sell? So last week we had 722 closings compared to my notes. I went back in my notes to the roughly the same week last year. That number was 896, which is about a 20% drop in the number of closings last year versus this year. Not a surprise there. We're dealing with much higher interest rates this year than we were last year, which has definitely dampened the number of transactions that we're seeing in our market. So the homes that did sell, they spent on average 13 days on the market. Last year that number was 16, and the median came in at 5. Last year the median was also 5. Here's one that was a little surprising to me, which is the average sale price. That increased to $667,111 versus last year, roughly the same week last year. That number was $577,17. That's about a 15.6% increase in the average sale price. Again, though, small sampling of numbers. We have to put it in the context of the entire month because we can have a few sales that will cause that number to swing up and down, because it's a smaller number that we're dealing with. Last week, that number is around, I think it was around 11-12%. The previous 2 weeks, oh no, it was 10 or 11% last week. Previous 2 weeks before that, around 14%. So we're probably going to end the month at maybe 13-14% this May versus last May, if we're taking the whole month into context there. Median 585 this year versus 510 last year. That's a 14.7% increase in the median sale price. And then on average, homes sold for 4.37% over their asking price. Still really strong numbers considering these are all deals that went under contract with much higher interest rates. Like we've been saying week after week though, fewer offers, fewer showings, but still pretty strong numbers. Last year, for context, last year that number is 104.15. So properties still sold better this year than they did last year. So now that we've gone through the numbers, one of the things that I think is really important is that we're not going from seller's market to buyer's market. We're just going from extreme seller's market to more of a seller's market. But we are heading in the direction of more of a healthy market. And what is a healthy market? Healthy market is when you need to sell your house and buy something else. Maybe you want to buy the bigger house because you have an addition to your family, or maybe you're combining households or something like that, or you're downsizing, or you need to go from the large house to the single level or the condominium or whatever it happens to be. You can do that. You can put your house on the market, get a contract. Once you have a contract, go and find that replacement housing because there's more to choose from. You don't have to compete as heavily with a contingent offer, and you can find replacement housing doing that. Or if you need to sell your house and move to a different area, you can do that. You can sell your house without having to worry about ending up homeless in this interim because you aren't able to secure housing. So we seem to be moving more in that direction, and I do feel like there's going to be some opportunities for buyers this summer. You know, usually July and August, they're pretty quiet months on our market, and there may be some nervous sellers who are sitting out there who maybe were a little too aggressive with their pricing, and they would be open to a buyer coming along with a lower offer and selling the house. The other thing that we're noticing too, though, is that buyers are now able to negotiate for more deferred maintenance on homes. So when sellers are putting their homes on the market, you know, buyers were coming in hot and heavy saying, hey, I'm not going to ask for I'm not going to ask for any repairs or credits in lieu of repairs. And in some cases, they were even saying, no, I'm not even going to do my inspections, or I'm going to do my inspections, but it's only for my information, and I don't even have a contingency in place to protect my earnest money if I'm not happy with the condition of the home. So the market is definitely changing. As always, if you like this video, please give us a thumbs up. And if you like the content, I'd love it if you could subscribe to the channel. And if you know of someone who might find this information helpful or interesting, feel free to share the video with them. And if you've got any thoughts or questions, experiences that you've had on the market, feel free to share them down below in the comments. I do read all of the comments and respond to all of them. And then, like I say every single week, all real estate is local. So if you're curious about what's going on in your neck of the woods, in your subdivision, in your municipality, feel free to reach out to me. I'm happy to share the numbers with you and share what I know. All right, we'll see you next week.